Hello, today we are solving October 2022 IAL Unit 2 question number 2. So Potuvill Textiles is a PLC which employs skilled workers to manufacture dresses. The flexed budget system was there. It asked in the first part we were asked to calculate revised budget, and then there was a information given about the variances that has taken place, and we had to calculate material usage variance as opposed to the budget. What was the quantity of material usage variance has happened, and material price variance, and the total material variance that has happened. Now we had to calculate, there has been changes even in the labor hours worked and the labor rate, both has changed. So now let's calculate first the labor efficiency variance. Okay, so the labor efficiency variance, okay, how will you calculate? How many hours they worked into the rate. That is the general formula for any labor efficiency variance. Budgeted hours worked minus the actual hours worked. So what was the actual hours they worked, okay, times the time, okay, the difference of the quantity of the time they have worked times the budgeted rate. Okay, now let's see what was the budgeted hours worked they had to work. So budgeted hours they had to work was equal to, we had already calculated, it was in the first part of the question. Okay, the total hours they had to work to produce the 2484 dresses were equal to 1656 hours. Okay, we had already calculated in the first part of the question, you can go and see. So now the budgeted hours is equal to 1646 hours. Okay, to produce this many dresses was equal to 1656 hours. 1656 hours was the total time taken to produce for 2484 dresses. Now actual hours worked, let's calculate what was the actual hours they have worked. Based on the information given here, they said that okay, they had worked, okay, on all the days except on the Thursday. Okay, Thursday afternoon, like on Thursday afternoon 2 hours they didn't work. So actual hours worked was equal to, there were 45 employees, and each, okay, on each day they had to work for 8 hours. Okay, 8 hours. So 8 hours they had to work into 5 days a week. Okay, so that 1800 hours totally they worked. Okay, if they had to work the first, okay, they had to work this much, but what had happened is they didn't work on Thursday afternoon. So Thursday afternoon work, so that is equal to 2 hours they didn't work. Okay, so 45 employees didn't work for 2 hours, so that is equal to 90 hours. I will have to subtract 100 hours. Okay, on Thursday afternoon they didn't work, and all the workers worked overtime. So all workers worked 1 hour overtime on Friday afternoon. So Friday afternoon they had worked 1 hour overtime. All of them had worked, so 45 into 1 hour. They had worked extra. So that is equal to 45 hours. So now actual hours worked will be equal to, so actual hours worked is equal to 1800 minus 90 plus 45. So they work for 1755 hours. Okay, this is the, now it's going to cause an efficiency variance. So let's calculate the labor efficiency variance. So that is going to be equal to, the budgeted hours was 1656 hours minus 1755 hours they worked times the budgeted rate. The budgeted rate they were paid, the workers were paid for 6.9 pounds per hour. So 6.9 pounds per hour. So that is going to be equal to minus 683 minus 683.10 pounds. Okay, this was the amount that had that was difference between the budgeted and the actual cost of payment for the labor cost due to the change in the working hours. So because it is a negative, I am going to call it as 683.10, okay, pounds, but it is adverse variance. Okay, it is